So, at any rate, I'm really delighted to have this panel with my two esteemed guests. For many, many years, people have been saying the biggest problem is you can't get banking to work with crypto, and therefore it'll never succeed because there's no off-ramps and on-ramps. It's all controlled by J.P. Morgan, and they're not going to let it happen because it'll threaten their $32 billion a year profits in the credit card industry. But lo and behold, Puerto Rico, among its various innovations, has allowed through the IFE legislation that Giovanni had talked about earlier, let some enterprising entrepreneurs come down to Puerto Rico. I mean, really the history goes back to Noble, right? Noble Bank, which was the bank that allowed the creation of Tether back in 2014. And Ed, you were part of that. And now you've got Medici. And then Bo, we've known each other a couple of years. You've spoken at the past couple of shows. And you've been sort of gradually building down here a variation of what you had in New York with a merchant bank and now a bank. So I'm going to let each of you talk about sort of your history in the banking space to what you're doing today, and then I'll ask some questions beyond that. I'll start with you, Ed.
Thanks, Michael. So my background is 15 years American Express, so I'm really a payments guy, card payments guy. With Brock Pierce, co-founded Blade Payments, which was the first Bitcoin crypto debit card processing platform, which was a private label, white label B2B platform. Got acqui-hired into Fedor Bank of Germany, which is the first European digital-only bank. And uniquely about Fedor at that time was that they were crypto, and they are crypto-friendly. So coming off of that experience, again, Brock was pitching me to, you got to come to Puerto Rico, check out Puerto Rico, great things are happening here. So came down, I guess it's 2 years ago now, at CoinAgenda, and decided that this would be a jurisdiction to pursue a banking license. Initially looked at the de novo application process, and eventually decided to do an acquisition of an IFE that was already set up.
And so Medici up and running. Give a little elevator speech on it.
Yep. So my co-founder is Prince Lorenzo de Medici of the famous de Medici family, and we liken this to Medici Bank 2.0. The original Medici Bank was very innovative in its time in the 1400s, 1500s. Invented or promulgated double entry accounting, invented the check, invented bank branching or branch banking, invented correspondent banking, invented the IOU, invented the letter of credit. So we're looking to bring that same spirit of innovation here at Medici Bank. We are up and in beta. We expect to open to the general market in about 30 days. Our orientation, we're not strictly crypto, right? We're crypto friendly. That I found it brings with it a lot of baggage. So I've been in the crypto space for 5 years. Most regulators and bankers are not yet in the crypto space, and they don't understand it at all. And if you mention crypto or blockchain, they tend to just generally freak out. So our orientation is commercial banking and international family offices. Our focus is on international money transfers, as I think that's the spot where we'll be better, faster, and cheaper than a typical international SWIFT wire. So we're looking to disrupt banking as it relates to how banks just amass deposits and in essence rip off their customers with high fees. So we're purely digital operations. We have a much lower cost structure than a typical bank does, and we're willing to operate at a perhaps the same margin percentage, but it's going to be, since it's lower cost, ultimately the fees should not be nearly as high.
Great. So Bo, how does one of the world's top energy traders out of Houston come down to Puerto Rico and get involved in crypto banking?
I actually came because of an energy trade. So I started, I had an active business that made markets in oil storage, actually. And we had some trades rolling off, and I read about the tax incentive programs, and I was able to leverage that. And then in educating myself about the incentive programs, I stumbled on Act 273 and many other neat benefits. And so I'd been an early investor in crypto. I bought it for $13 and basically did nothing with it until it hit about 1,100. I didn't think it was going to surpass the price of gold. So I liquidated and then re-entered the market, mostly lower, thank goodness, and have held it for quite a while. So in that thought process, I was struggling with whether or not to invest my career into crypto versus my money, because my time is much more valuable than the money. And about mid-17 is when I made the decision to take a big stack of technology that I owned in some other businesses and apply it into a bank charter. And we've been operating for a year. We are, to my knowledge, the only bank in the United States that has a license to accept crypto and fiat as deposits. So we're beyond crypto friendly. We're in it. And to Ed's point, that creates a whole basket of unique challenges in working with regulators. The good news is we are starting to see a slow thaw in regulators' reluctance to kind of deal with crypto-related issues. And it's driven in large part, I think, by activity at a central bank level, where you see 6 or 7 nation states that are keenly focused on using DLT to support their national currencies. We're actually have just become involved in a project with the Bahamian Central Bank on issuing the sand dollar, which I find to be an amusing name for it. But they are essentially in the process of putting the Bahamian dollar on DLT and sponsoring the right sort of traditional payment mechanisms for it, as well as crypto rails. So we sort of have a worldview around. And by the way, the name of our bank is the San Juan Mercantile Bank and Trust. It is part of a holding company called Mercantile Global Holdings. We have a separate subsidiary that will sponsor the launch of an exchange this year called San Juan Mercantile Exchange. And we're open to do business with all exchanges. So our bank has sort of an open source philosophy around it. But anyways, so we're seeing this slow thaw coming from the regulatory quarters, not on all fronts. I was just informed that some interesting comments an SEC commissioner made today about ETFs that were not inspiring. But aside from that, we are seeing regulatory bodies interested in sorting out how to put crypto in the appropriate box so that national policies are not stepped upon.
Well, when you'll notice, of course, that turning down yet another ETF did very little to the market price, because it's all kind of baked in right now. I think the expectation is that the only time an ETF is going to get approved if it has the name Goldman or JP in front of the. Because so far everything that's gotten approved for anything has been, Chicago Mercantile Exchange, New York Stock Exchange parent company with BACT, and obviously. Both of you come from pretty traditional backgrounds, but you're not currently with traditional entities. I mean, was it helpful that you kind of ran NYMEX and then did all this traditional stuff in getting your licenses and having your conversations with OSIF?
No doubt. So it helped. I started my career with the Fed and went into commercial banking, ended up being president of the largest commodity exchange in the world. Those factors are, I would say, the cornerstone of why regulators will take our opinion on things seriously to begin with. We have and Ed's in the same seat as I am, having been at Amex for years and worked in regulated institutions that respected the law, worked hard with the regulators to communicate, early and often. I think, and I will just share this generally, the biggest mistake we make in crypto is having this viewpoint that we can somehow just sidestep regulation. In the early days, it was extreme. I'll never forget the anarchist dream of, I'll never pay taxes again and fuck the banks and going on and on and on. So I will just say, and this will rub some people in the crypto universe the wrong way, you are not going to escape regulation, period. And it's global in nature. It's coordinated. It's coordinated through the G20 and their regulatory bodies. The weaponization of regulation is coming through KYC and AML.
And FATF.
What?
And the FATF.
Yeah, FATFA, exactly.
Yeah.
So the body of law that regulates how we handle transactions from KYC and AML is incredibly onerous, and it is that way on purpose. And it is to try to make sure that the pedigree of any transaction has not gone through an enterprise that supports criminal activity. So you can only imagine how many false positives you get in that sort of surveillance, and that is probably I don't know. Yeah. Ed may have a different view, but that to me is the biggest challenge.
Fully agree. And I'll reiterate the comment about the benefit of having I'll call it a regulated background. The conversations with regulators saying, I've only really worked in regulated entities. I don't understand how to not, respect regulators. I could see how it resonated with the regulators when we had those conversations, because I think a lot of their conversations with people that are unhappy to be in the room, and the regulators are afraid of those people because it makes their job more difficult. And you understand, regulations, you may not like the regulations, but they exist for a good reason, right? The intent of regulation is to protect the weak and innocent masses, generally speaking. And the government employees whose job it is to enforce those regulations see it as a noble calling, and one that they're typically under-resourced with, right? So they have too small of staff, too small a budget. Perhaps they're not the they're coming off of the height of their career. A lot of regulators are former bankers who used to make a lot of money and now are kind of almost doing volunteer work relative to their former compensation. And so they don't have a lot of patience for people that seem like they may be trying to skirt the rules a little bit, or make up a story to make it sound good and say they're a software company when they're really a payments principal. They're taking money and moving money, and they say, well, we're just a software company. Regulators don't appreciate it because they've heard everything, right? They've seen everything. Their job is largely dealing with criminal activity, right, and prohibiting criminal activity and managing and mitigating criminal activity. So they're very good at seeing when a criminal tries to pretend to not be a criminal, or someone that's not necessarily a criminal is pretending to be something they're not, and the flags go up.
Taking crypto.
So I think for people that come from a regulated background, the regulator just is a little bit more at ease.
I think what's interesting about both of your backgrounds is that you both come from the highest areas of traditional finance, but you're still both OGs in the crypto space, as opposed to someone like Bakkt comes in and they're like, hey, we're Wall Street and we're coming in, but they keep acting like Wall Street, right? I mean, they're not there to sort of like empower the little guy. They're there to say, how do we go and do the same, kind of derivatives and hypothecation that we've always made money on selling air 50 times over that we did there to the Bitcoin market. And, as Caitlin Long often points out, that's how you make more than 21 million Bitcoins. You make 21 billion derivatives on Bitcoin.
Yeah.
And it's a real threat. And I think that you understand that, and you have to walk both sides, because, the crypto community looks at your background as being OGs and says, boy, you're talking the right talk from our perspective, but you got to talk the right talk to them too. I mean, where is the middle line?
Yeah, so you need to be somewhere in the middle. I believe I'm somewhere in the middle, and because I can respect both sides of those arguments, and then translate that. I've yet to meet a regulator who is not willing to listen and learn. Right? They're trying to do their job, and then when you throw something new at them, they're like, wait, we're not going to do anything we don't understand. Right? So until we understand it, the answer is no. Right? So let's have conversations and meetings and figure out how do they get up the learning curve. on what this thing is that we're talking about. And if they can get comfortable with it, then they're like, okay, now I understand it. Now I know how to regulate that or manage the regulations that already exist or apply them to that. But if you don't have the patience or the ability to see both sides of that equation and translate it, it's very hard to make progress.
So which of the regulators do you have to pay the most attention to? I mean, the worst has been the SEC. And you're a bank, so I don't know if you have to deal with them as much as some of the other ones. I think the best has been the CTFC, because they're just like saying, hey, we only care about the purity of markets. We don't care so much about, everything that goes into it, as opposed to, under Clayton at least, I think it's been, they're supposed to be there to protect the investor, but they really, I think, doing crazy things like saying, well, we won't let, just tokenized Kickstarters that are clearly, by most definitions, passing the Howey test exist, and yet we're going to go and let people spend a couple $1 million doing a Reg A plus for a token where you get neither equity or the ability to trade a token, and pawn that off on the little guy on effectively an OTC market. Makes no sense to me at all.
Well, I'll speak to OSIF because you probably have a little bit more, you're more aggressive and,
markets.
Therefore you got more regulators to worry about. But primarily as a Puerto Rican Act 273 IFE, both Bo's Bank and my bank are regulated by OSIF, the Office of the Commissioner of International Financial Institutions. And that's our local banking regulator. Related to them and over them is the Federal Reserve Bank of New York. Of course, the FBI and FinCEN get involved, but not from a regulatory. That's more of an enforcement perspective, and hopefully we'll never have any experience with that. But it's the local regulator here is the primary regulator, at least for our bank. And we don't have to deal with the SEC or CFTC because we're not dealing with commodities. We're not actually taking custody of crypto ourselves.
And you've applied for the Fed window access, I believe.
Yeah.
So the Fed will end up being.
Yeah. So then the Fed, once you get a Fed account, then you get regulated by the Fed. The local commissioner here, they examine using the FDIC handbook, examination handbook. So FDIC insurance here is optional, not mandatory, which is every state inside the states. All the state regulators and the national regulator requires that you get FDIC if you're going to be a bank. Here in Puerto Rico, it's optional. Right. So if you do opt into it, then you get the FDIC as a regulator. When you get a Fed account, you get the Fed as another regulator.
And with the crypto access, and does the FDIC make it harder?
Yes, because you have just another regulator that needs to understand what you're doing. And
are either of your banks FDIC or planning to be FDIC?
We're not FDIC. We're considering it, but not in the near term.
We're not FDIC approved either, and I don't think we want to be.
You're not giving out toasters for little small accounts.
No, we are very institutionally oriented, and our foundation was built on being a clearing bank for large trading firms. So they really receive zero utility from us being FDIC insured. And as a note, when OSIF comes in and audits your bank, they use the FDIC handbook. So you're being held to an FDIC standard, and unless you really receive a true benefit from insured deposits, then I would argue that it is not worth the expense. We are also applying for a Federal Reserve access, and so that is the holy grail of American banking. And if you think about when foreign institutions, especially, engage us in dialogues about corresponding banking, we are now in a seat that we're a corresponding bank to other countries seeking U.S. dollar access. And so, again, we come at it through a very specific lens, which requires a little more heavy lifting on the educational front for crypto. And then we have what is a little different from what Ed's doing is we also custody the crypto itself. And so in that activity, and we can sponsor trading as well. And then when we launch the exchange, all of that touches crypto for us is limited to anything that's deemed a commodity, so Bitcoin, Ether, and some others. And because of that, we are responsible to the CFTC. We don't have a specific CFTC registration, and we're not required to have one. Unless or until we want to create derivative type contracts.
Okay. So is the custodial go up against the prime trusts and the state streets and yeah.
Yeah, well, yeah, I wouldn't be so as bold to say I'm going up against State Street, but yeah,
Okay.
Thank you for your vote of confidence.
So one interesting thing about the IFE is that a lot of folks have moved to Puerto Rico to be innovative down here in the crypto space. They can't use you as a bank if they're a Puerto Rico entity, right? Because they don't want you competing against Banco Popular, who's not going to do the same kind of things you do. Do you find that a challenge, or are you just sort of the rest of the world's a big enough market?
From our perspective, the rest of the world is a big enough market, and losing Puerto Rico is a de minimis factor. Sorry, but but if you're Puerto Rican or Puerto Rican resident, I think that's unfortunate because there's a lot of innovation going on in the IFEs, and the two banks and a few co-ops are not necessarily extremely innovative. Most banks generally are not very innovative, right? But
of course, on the business side, most Act 20 companies here will also have U.S. subsidiaries, and those would be allowed to bank with you.
Yes and no, or more directly, no. We asked for and received indication from the regulator about that. We had a 22 beneficial owner of a New York entity, and the regulator told us we could not bank that entity because it was owned and controlled by a Puerto Rican resident.
Good to know.
So on that note, there is some initiatives that started last year, made their way into legislation, and unfortunately got pulled out, that I think are very important for you all to be aware of, especially if you reside in Puerto Rico and have an interest in the crypto community here. But one is we have asked for any tax decree recipient to be able to bank with an Act 273 company. That was actually in the law on the last day before it got passed, Lay 60. If you're familiar with recent history, it got pulled out. I'm unsure why, but I could speculate. The other concession that we are trying to form, that I think Ed is also supportive of, we've only talked briefly about it, is a self-regulatory body for IFEs in Puerto Rico. And that has the unique ability of creating a very effective agency that sits in between OSIF and the IFEs, but is able to generate its own budget and therefore create some, I would say, improvement in the allocation of resources. Because, as you may not know, but OSIF right now is funded by the territory government directly, and any usage fees that they collect from a process goes back to the general budget of Puerto Rico. So they don't have the ability.
Which then goes back to the pay off the debt.
Or some, who knows where it goes. But they don't have the ability to unilaterally dial up or down the way that they apply their resources, which makes, you can have the most innovative law in the world, but if you don't have a regulator that's able to respond to it due to lack of resources, then you have some challenges.
Yeah, it's just in the last year or 2 years. I mean, I've been at this for 2 years here in Puerto Rico, and the pace at which IFE licenses are granted has come to almost a screeching halt. So I think in 2018 there was 10 licenses, in 2019 there was 1. Right? And the problem is, so you had 10 licenses being granted, let's say there was 12 or 15 applications. Each application generates fees, but to Bo's point, those fees don't go to the regulator's office. So the regulator's getting twice as much work as the year before, the same budget. In fact, I was told that their budget was reduced, they had to reduce their staff. And so their ability, just the bandwidth is getting restricted. So now, people that, you look at DLA Piper's website, it says, apply for a banking license. Please allow 5 months. I know people who are about 20 months into it, right? So,
yeah, I think the current waiting time is, I would put it easily at 18 months, and that's to get your permit to organize, which is that's your ability to say, okay, I'm a thing, and I can raise money, and I can start deploying technology and acting like building a bank, and then you get the permit to operate, which at best case will come 3 to 6 months later.
So we're now sitting in 2020, a couple months before the halving. Let's go out 5 years. We got 2 more halvings past And potential, according to a lot of estimates, by 2025 we may be at $250,000, $300,000 Bitcoin. I remember 2 years ago when you first keynoted at the giant CoinAgenda Caribbean with 750 people at La Concha. You were hopeful that you'd be able to, when you got up and running, do things like be the way that someone like Charles Schwab could go on after crypto. I mean, is that still part of the vision? Where do you see yourself being in 5 years if you're able to, follow your plan?
So very much the same plan, which is to build what I would call a traditional ecosystem that can support the evolution of crypto markets and crypto behavior. I think that is going to, I was hopeful 2 years ago that would be right around the corner, and it's clear now that the pace of that progress is going to be almost limited by the pace of the central bank progress. Until you have a central bank, a major central bank, a G10, put a currency on a DLT, whether it's private or public, but they have to go down that path before you will really get serious institutional progress. But because commercial entities often, especially in finance, do not necessarily want to be the leader on something that sits squarely in a gray zone regulatory bucket, which we still are very much.
And 5 years from now, where's Medici?
Our plan is to have a bank headquartered in 3 to 5 major jurisdictions around the world, and then internetwork those banks with an ecosystem of other banks through blockchain, so we can move money instantaneously for zero cost in essence. That's the plan, and I'm pretty confident we'll be able to execute that. I think in terms of crypto banking, I think within 12 to 24 months, a lot of the pain will go away. Not because of what we're doing, but because there's a lot of banks that I've been speaking with over the last few years. 2 years ago, they were like, crypto's awful, we'll have nothing to do with it. Today, they're like, we find crypto to be pretty interesting, and we're actively trying to figure out how to do it this year. So I think this year we'll hear of a few names, one of them really big, and a few smaller ones, but legitimate, banks. One that's even got an API, right? So the banks will start getting into the space, and once this happens, the ice is breaking now, and we'll go from there being 3 or 4 crypto-friendly banks in the United States, there being 20, and then once you get to 20, then the other banks will say, fine, who cares? Crypto's just another type of business. So because precedent will have been set, the New York regulator's okay with it, California regulator's okay with it, and more state regulators will be fine, and of course the national regulator will say, well, if all the state regulators seem to be fine, we're fine.
So last question. So Puerto Rico, for all of its innovation, has not had a lot of public market success. And most of that they've had has actually been in the banking sector. I mean, the last major IPO that came out of Puerto Rico was for EverTech, which was a BPOP spinoff. And are you looking at tapping the public markets to be a public company out of Puerto Rico in the coming years?
That is, always an option. It's an interesting one. The public markets are still open, I think, to crypto innovation in a way that could be compelling. But there is there are a lot of headaches that come, obviously, with being a public entity, particularly a small one. For us, the question
says you're going to stay small.
Yeah, well, that's the plan. For us, the question is maybe.
The regulatory environment gets more difficult as you get larger. So when you hit like over $10 billion of assets, you have a whole other, regulatory oversight. And it also has impacts on margins, right? There's different laws. Small banks benefit from laws that large banks don't benefit from. Our vision is to tokenize and securitize the equity of the bank. Have multiple customers that may be exchanges that would help us get liquidity, and not necessarily go to the traditional markets, but go to the future markets.
Use the technology that you're helping incubate, and STOs, certainly really still in the nascent category, but obviously one of your bank's or one of your mentors, and I guess somewhat involved with the bank. I mean, Brock Pierce who's going to be speaking later today, had the first STO. So,
Right.
I mean, obviously, that must be, deep in your ingrained, like, how big can this market be?
Yeah.
And are you looking at STOs for any type of aspect of what you're going to be doing in the future?
We're not now, and the reason why is we've got plenty of wood to shop in the commodity space. The STO in the U.S. especially requires a whole nother addition. I mean, now you're adding...
Not necessarily for you to leverage it, but for you to even work with it as clients.
Well, that's what I'm saying.
Yeah.
To work with an STO object, a widget, let's say, we would then have to be registered and regulated by the SEC and FINRA, and that's a high price to pay unless you've got a real clear vision about how that's going to work.
Great. So I guess we're about out of time. Time for one question from the crowd. Michael.
So you mentioned the regulation in crypto.
Yeah.
Can you give a little more detail about what you mean by that and how it's going to affect just the average person?
Sure. So I think I can simplify it by saying, I mean, if you read the tea leaves, I would follow everything Mnuchin says, the Secretary of Treasury, and anything that comes out of the Federal Reserve right now. Those will be really, truly the leaders of how regulation forms around crypto. The primary concern, there's two tracks of concern of regulation that the regulators have. One is that they cut off crypto for being able to be used for criminal enterprise, meaning drug smuggling, weapons dealing, sex trade. You go through the list of sins. That's one bucket. The other bucket is that we do not use crypto as a disguise to basically commit fraud through public security type efforts, i.e., hey, invest in my coin, you're going to own X% of the company, and you take all the money and disappear and leave the country. That falls mostly under the SEC. That bucket is going to take the longest, in my opinion, to crystallize around what if any, rules they add to the process. What we're going through with the ETF is a great example. It's just going to take a long time. The primary goal is to prohibit fraud. So worthy endeavor, but they are not going to let crypto sit outside of the regulatory framework, at least not in the U.S. On the banking side, or it's almost Bitcoin related, where you're trading what is deemed commodities in order to be transactional or preserve your wealth. In that bucket, you're going to have everything on top of you around KYC, know your customer. You're going to have to know your customer's customer, and anti-money laundering type surveillance, which means any transaction that comes through the hands of a properly regulated entity will trace the bona fides of that transaction and the pedigree, if you will, through a series of processes. On the blockchain side, it's easy. Interestingly, right? You hit a button and you can see the coin all the way back to when it was mined. But that in and of itself creates some nutty challenges. So, for instance, if I receive a coin from a client that's been through 200 transactions since it was mined, and transaction number 2 was from a known, let's say it was from Silk Road, and we know it's a Silk Road address, how do we handle that? And at what point do you pick a stop? So if you really want to get esoteric on this issue,
this is not. We don't know how to handle this in traditional fiat,
Right.
Because if the money got laundered well at step number 3, then all banks downline just looking at clean money,
Correct.
right? So when you're presented with, oh, geez, 400 steps ago,
Right.
it was actually dirty.
Right.
What do we do now?
So part of our process has been educating regulators about the simple fact that achieving their goals is easier with crypto than it is with fiat. But I would say the way that that's going to impact you is transactions are going to continue to be monitored. And from a consumer perspective, it's just a hassle. So for instance, if you've had a pattern of doing business on our bank, or if I ran an exchange, any entity that touches money, and we are observing your pattern of behavior, and then one day you want to move $300,000 in, but you've only ever moved $3,000. And the next day you want to move it out. So all the red lights go off internally with us, and we're like, something funny is going on with that transaction. It may not be illegal at all, but it disturbs a pattern which requires us to file a report with the government. It requires us to call you and ask all kinds of information about what, why, when, who, and where. And so if you grew up like I did, I was born in '65, and I'm used to being angry if a bank dared to ask me one question about my money, right? Those days are gone. And so the regulatory scrutiny, because we've developed this cool utility called DLT and a store of value in Bitcoin, those positive prospects have created dilemmas for regulators that they're only just now starting to get their head around. So you should just expect that in the United States, dealing in both crypto and fiat is going to feel more constrained than it ever has been. What I think we're trying to do is set up a paradigm through technology, through proper relationships with government, education, so that if you're banking with us, you have less of that hassle than you would, say, at JP Morgan. Great.
Thank you very much. And thank our guests here, panelists. I guess it's only two people, it's not panel, interviewees. And we're going to move on now from the world of banking. One last question.
What's your opinion? 80% of them saying that global letter of credit is not security.
Global
It kind of depends. Now I'm going to be like an attorney. It depends, and then 200 hours later, I'll tell you. No.
So our next panel is actually going to answer a little bit of that as well, because we're going to go from kind of traditional banking to DeFi and CryFi. So
Maybe you should handle it there.
yeah.
So I'll give you the short answer from my perspective. If it's one letter of credit touched by one counterparty, and that one counterparty wants to sell it to somebody else, that can work without it being a security. But if you subdivide it, now you have a whole nother issue.
Yeah, agreed. And put it on a marketplace and let it be traded.
Yeah.
Bid-ask spread on it, yeah.
Yeah.
Looks like a security.
Yeah.
Okay, thank you very much, and we'll